Hi everyone, and welcome to this afternoon's webinar. I'm Ross Ferry, I'm Chief Executive at Syndex and hosting today's webinar. We're going to hear today from Forest Enterprise CEO Bert Hughes. Bert's going to present on their business and their latest investment opportunity, Wairarapa Group Forestry Investment. If at any stage you'd like to ask a question, you can select the Q&A function at the bottom of your screen. Send your question to us and we'll either raise it live at the end or one of the team here might write back to you with the answer. There is a raise your hand icon there too, but we're not going to use it today, so if you can just avoid hitting that button. Talk a little bit about Syndex for the moment. Syndex provides services to investors and issuers in the private capital markets. It allows investors to access private business investments, including shares or units in syndicates and partnerships. And that, of course, helps the businesses that are looking for capital either fund growth or fund new opportunities that they might have identified. We're really pleased to be working with Forest Enterprises and listing this latest investment opportunity, and Bert's going to cover it off in full. It's a really interesting and topical sector, as you will have seen, and Forest Enterprises is an experienced and very successful forest manager, so we're looking forward to hearing to what Bert has to say. As an investor, Syndex offers you access to a number of tools to ensure that you can buy or trade interesting, proportionally owned assets on a well-informed, transparent and orderly market. It helps you manage your portfolio through your investor portal and also helps you communicate effectively and be communicated with by the issuer when you wish to. Okay, well that's enough of an introduction. Right now what I'm going to do is hand over to Bert.
Oh, thanks, Ross. It's great to have the opportunity to talk to investors and people interested in forestry through the Syndex webinar presentation. Our first slide, which we're just looking at, that's an aerial view from our drone and UAV. So we do a lot of this aerial imagery, which is very useful for our forest management. It shows here around the road and so on. But we'll go to the next slide, I think, now. So if we could move forward one, please. Now, what we have here is Forest Enterprises shareholders. I'm on the left. On your immediate right, the yellow high-vis is Gordon Wong. Gordon's a lawyer. He's our managed investment. In the managed investments, he's a guy who wrote a lot of the paperwork, and he's the director of legal services. Now, the next. The second from right, that's Dan Fraser and the blue sky behind him. Dan's he's based in Gisborne. He's our Gisborne regional manager and a shareholder. Dan's an expert in complicated roading and harvesting systems, and a real expert in health and safety in the workplace and in mitigating, and performing well in the environment. In the centre, Alta Coleman. Alta's our forest estate manager and also a shareholder. Alta does a lot of the operational work in the Wairarapa and is crucially involved in what we call forest modelling and forestry, in a sense, the forest science behind it all. It's to the extent it's similar to precision agriculture. So Alta's role is to understand the crop and the land and how the data is accessed and recorded, and how models can be run which will tell you, if you have a forest planted in a soil type of a certain temperature and a certain genetics, what is it likely to perform as over the lifetime of the crop. So that allows us to do the complicated valuations and yield predictions, which drive the cash flows of the investment. Now, on the left with the blue cap, Graham Tyndall. Graham's our Managed Investment Services Director, and essentially in the company, I manage most of what's outside and Graham manages most of what's inside. So Graham's role is really the in a sense, the protector of the value and the processes. So he's really responsible for the quite complicated documents which set out cash flow and PDS and administration and handling of scheme property, which is vitally important. That scheme property is very clearly identified and very clearly managed. He engages the auditors and those things. Now, I'm on the left there. I'm known as the CEO, although Graham and Gordon have very senior roles in the company, and so the three of us tend to reach consensus on the important things. And my background really is as a forester. I've done an awful lot of time in the business of turning trees and forests into cash. So it's important that we do that in a way where you've got the asset value, which largely the point of maturity turns to cash, and so I know the customers and products that they want and what they're going to do with the timber that they're buying or the logs and how to get it there and what it costs. And there's a number of others who have that knowledge, but I really take care of the log sales and in a general sense overseeing all those forest activities and valuation. And of course, we've got that 120 years of combined experience between us. And 50 of these managed investment schemes, $450 million of assets. And I think the asset value grows each year because the asset value of forest is really in its growth, its natural growth of the crop. Every year the trees are larger and they're 1 year closer to their cash flow. And then once you start harvesting, of course, the assets turn to cash, and the cash is distributed to the 6,500 individual investors. And the number plus 600 plus refers that there is a secondary market and there is a bit of transition when people, for various reasons, want to buy in the middle of a rotation, they want to sell these things. There's opportunities. So the numbers are flexible, but there's a lot of people involved. And I would say, out of the individual investors in forest enterprises, we've got more investors than there are members of all of the forestry industrial organisations. So we represent a lot of people who place a lot of store and values that arise from land, trees, and crops, and the benefits that forest brings. I think next slide, please. These photos, while we wait for the next slide, are around our sites. They're all taken field work. Try to spend a lot of time outside. That's what everything is. So Forest Enterprises started in 1972, and it's a very long time for a business like ours to remain as it is. The vision was to make forestry investment accessible to retail investors. And by retail, we mean that the average New Zealander, perhaps average wage, living in a normal house, doing normal things, should be able to afford to invest in land or trees, rather than having it only accessible to the wealthy and the pension funds and corporate investment, which are probably welcome in the ranks of forest owners, but certainly have a different customer base, if you like. So, we've made that possible, we think. So we professionalised, promoted, grew forest investment back in the 90s. And back in the 90s, of course, I was quite young, worked for the Forest Service then, and I would look and see what the company was doing on television myself with the advertisements. And they bought a lot of land as a result of changes in the farming industry, where it became clear that forest investments would have a better return to land than some of the pastoral farming on some of that land was having at the time. And that's one of the great things in New Zealand. There's a choice of land use. So we're we would say, full service investment and forest management. So we promote the forest, we sell them, we manage the asset and the investment through to the harvest and delivery of the cash. So the succession, which we mean the team. How does the team, obviously not the same people from 1972. We've had, 3 or 4 important transitions in the business as people have handed on. And most recently, Steve Wilton was a long-time CEO, handed it on to the people on the previous screen. And the reason the succession's important, if you like, is that when you're going into an investment that can take multiple of decades, you really want to know that there's some intent to stay in business, and we intend to stay in business, and we have a track record of doing that. So forest investment is a direct investment in a pine plantation forest, land and trees, one rotation of crop. We say 26 years, that's a reasonable target. Biologically, the trees are well grown. And by direct investment, it is important owning the land, and it is important owning the crop. And because the land is a good store of wealth. It's good land that we own. It's well located and fertile. So in a general sense, people are comfortable with land. You know what it is. The crop is the aspect of the investment that's really getting the growth from sunlight and soil and fresh air and fresh water. So, that does the growing, whereas the land tends to, progress along, staying ahead of inflation, but the real return comes from the tree. So we've been doing it for 47 years or more and helping the 6,500 individual investors grow their wealth. And for example, having paid $20 million of harvest distribution payments since 1 of January 2018. So clearly those payments came from the tree crop turning to cash, which was important, and it's ongoing, and if anything, speeding up. So we've got about 20,000 hectares under management, 450 million of assets. That's the trees and the crop. Those things are audited, and they're on the accounts. So and they're accessible to investors. And we are a licensed manager of forestry managed investment schemes, and it was a very big deal to us becoming licensed. There's very few people in our line of work that have done it, and it's quite a challenging operation to do. There's legitimately a lot of questions that Financial Markets Authority are going to ask you if you want to be licensed to manage public funds, and that's as it should be. We'll go to the next slide. So why invest in forestry? And what we're doing in this picture, this is a group of our forest investors, and we're standing on one of our sites in Gisborne and looking out to where there's been some harvesting, there's some remaining crop, and we do these site visits because it's a really good opportunity to show people the scope, the nature, and just the scale of what's happening and the complexity, and also the values that we have in forests, which really starts with the sort of blue sky and green trees, which is great. So go to the next slide. So why our clients invest in forestry, and it is a large, diverse group of people, not in the generally reported forest owner statistics, which, the statistics generally reflect. There's a lot of farmers, lots, and then you tend to jump right into some corporate organisations, some pension funds. But actually, there is a lot of medical professionals, accountants, lawyers, business administrators, self-employed, tradies, small, entrepreneurs, farmers, engineers. So essentially, the list does go on, but these are people who can see that putting a small amount into land and trees is doing a lot of good for the environment and for themselves. So we see it as an alternative asset, and to balance your portfolio. Now, we do know that statistically this diversity is very important because all the different, if you call them asset classes, different things you own, have different returns for different reasons and different cycles. Now, forestry cycle is quite a long cycle. It doesn't tend to be at all correlated with stock market returns. So it's kind of what you might call counter-cyclical, which means that if your share portfolio is down, your forest is not, essentially. And it adds weight to your sustainability goals a lot of people have, is to, just to do some good for the environment if you can. So investors are aligning with this environmental social good. And it is a real thing. It's a good goal to have. It's land-based, so tangible, real. And we say sense of place, in that a lot of our investors they've been to their forest a number of times and they actually like the forest that they invested in because of having been there and seeing changes in the growth of the crop. It's just the general satisfaction that you get from walking in a forest, which I think the Japanese have a term, forest bathing. It does, in my mind, it makes me feel better to walk in the forest. So there's some place doing good. And of course, the returns, say that we're talking a 26-year return, then you can time various investments that we have for sale to be available. If you're 40, it comes on, you're retired. That's good sense. You're making a portfolio. So it can be a family legacy for children, or perhaps when your children might want to buy their first home. It's different to other investments, but you can understand it. You can, it's tangible. You can see. It's passive in the sense that the manager manages, and we do a lot of reporting. We try and do a lot of visually with graphics and things as well, so that the passive investor can feel confident that there is some serious scientific management going on, where they can have a sense that it's all being achieved because it's audited in the reporting. And we have a forest auditor as well as a financial auditor. So our forest auditor travels with me personally to the forest for 8 or 10 days of the year, and we go everywhere. And he writes his own report suggesting what he sees. And then if you do, need to get out, and there's always reasons that people may want to sell long-term investments for their termination date, and that can be all sorts of personal reasons for families and for even if obviously people die. So what happens? You have to have access to money for other family, and so the secondary market works well. And we've never failed to sell units. We often get more than perhaps a valuation would indicate, but not always, but they always sell. So next slide, please. So managing the forest asset. Now, you've got a picture there, what I'd sort of consider a pretty nice forest. It's kind of a little bit of sunny, and it's nice and green, and it's got a bit of fog, sort of indicating that you got a bit of moisture in the soil, and the greenness is really showing us. As a forester, you like things to be green because it's indicating the strength of the chlorophyll in the leaves and needles that really drive growth. And of course, the fog is showing us it's nice and wet. So as a picture, that would make a professional forester feel reasonably comfortable. So let's move one forward. So we do all of the management. We've chosen the land, but we're going to establish it. We're going to plant trees. We're going to choose the genetics, and what we tend to do is we'll actually buy genetically improved seed, the best we can get, and we have a contract nursery who grows it for us. And in their growing sense, they deliver us seedlings to a specification, and in growing our seed, we know what we're getting. So the objectives of forest management are to manage the risk and to generate value and returns. And risks arise from a number of things, really. But risk is the likelihood of something not going according to the plan you have. So foresters always understand and live with live with risk. And whether that's environmental, you have droughts, you have floods, you have erosion at times, and you can have varying growth rates, and sometimes you have pests, and sometimes you might have fires. So you've got to manage those risks, and the management of those things can be around just generally what you plant and how you tend your crop, and how you add value through tending, how you insure, and generating value and returns. Our belief is that pruning and thinning the crop, the tending is producing a lot of value for investors. It's adding value to each tree by creating a higher value product for our customers who want to buy those trees and logs. So whenever you touch a tree or go into the forest, you want to have the goal that you add value. You want to be better off. So we employ professional, skilled staff, core competencies. I'm a huge believer in competency. That's what we're hiring for. People who know how to do things, how to do difficult, complicated things. And then we want to have good relationships with contractors, and we want to use technology and best practice because, man invented tools, or if you like, humans invented tools in order not to have to work so hard all the time and to get more done. So that's the goal, efficiency. Long-term contract relationships are one of our real signature things. That we've got loggers on board that have been with us the whole time I've been with the company. I hired them 8-9 years ago. They're still with us because they're doing a good job. They know what we want. They're safe. They're treating the environment with respect, and they're value for money. And we talk about leveraging our scale. Now we're rapidly becoming one of the largest harvesting organisations, I suppose, certainly in the southern North Island and also in Gisborne. We're getting up to 600,000-700,000 tonnes a year of harvesting now, which is significant in New Zealand, where we harvested 32 million tonnes last year. We've done a decent chunk of it. And lastly, fairness as a core value. The reason for that, I believe, is that people respond to fairness in quite a visceral way. If people believe that they have a fair go, and I mean contractors and staff and customers and investors, then the sense that everybody's getting the opportunity to get out of this what they needed. If we are too tough on contractors, then they tend to leave. And there's an actual measurable financial benefit in having our contractors not leave. So the fairness as we practice it is not just altruism. It is better for the investors to have a relationship with key customers and key suppliers who are motivated to do the business. Move a slider. So establishment here, we're looking at a picture of probably Rangiora Forest, one of the Wairarapa forests, grass and some young trees. And you can see what you'd describe as logging slash there. That's just nicely decaying and turning back to the soil, and it's a good thing in that context. You can see the stumps. Now, this is second rotation, so it's the same site as we planted and harvested right back in that one was in the 80s. So it's good site selection, meaning that we bought good land, which means it's in a good place, it's nice and warm, it gets plenty of water, and it's not infertile. It's relatively good soil. And we're replanting as we follow harvest. Leaving the land bare is a missed opportunity. Basically the forests make money by growing tree crops. You certainly want to have the tree crop in land as soon as you can. We're using the best genetics we can rationally buy. If there's anything better, they're generally a lot expensive. So, we've got to make that call on what's the best value for money, but the best genetics we can afford. And we're looking for this 26-year growth rotation harvest. So sometimes the second rotation for us, when we're promoting them, which we're doing Wairarapa Group now, is already replanted. There's a little bit left to plant, but largely it's in the ground and growing already. So it's already several years old. So that means that it reduces the time to cash flows. And land ownership is a key feature of our investments, and I really do think it is a key. And you owning the land, you really have that full benefit really of this crop. You're not just sort of passive leasing tenant. The land is yours. So, what we have with the second rotation option, what that refers to is that the landowners who owned that particular piece of land, which was Rangiora Forest, were able to sell their land at valuation, get paid at the end of their investment period, and at valuation, the new investors buy that land. So there's no margin on the land, but you will see in the PDS that there was some premium paid over valuation, which refers to the fact that valuations at that point were rising and have actually risen significantly since the land was purchased. So that was kind of priced in. It was agreed, and there's no margin. It's just a recognition of land quality. And so certain of the existing investors will reinvest, and others will want to exit. They want their money. Now, the key thing is to be able to get money. Like, you don't want to be holding on to things that once you've made the decision on. So we make it possible to exit. And when we invest in this crop harvest infrastructure, which is roads, landings, skid sites, landings being where the trees land, they go the truck, you've got to add value. Again, adding value. So you don't want to build roads that, we should say, encumber the value of the property, which means that it could make it worth less because perhaps they're high risk or they're in the wrong place, need to be fixed. So it's very important to us when we build these roads that they endure through the following rotation. Let's move on. Yeah, tending. So we really believe that tending is important. It adds value to the crop for a number of reasons, but pruning adds value. Two lifts sort of signifying that you have two goes at pruning. You go in once and try and get to about 3 metres, and you go back and try and get to about 6.5 metres. That 6.5 metres is a good length for customers who want to buy prune logs, and they pay maybe $200 a tonne at the moment for these prune logs over the wharf, and which is a significant margin over unpruned logs. And so that margin of maybe it's 50, 60, sometimes more dollars will pay for that pruning cost, which will be several dollars of pruning cost. So, you've got to wait some time before you get paid for that investment. But it certainly is a good return in terms of added value, and it also changes what you call the product coming out of the forest you're going to sell. So by pruning, you have a different product to sell and a high quality product. Thinning in a sense is we plant too many trees at the start for two reasons. One is that if you get some that are defective, you've got enough that you can lose your defective ones or of poorer quality, which is not as much of a problem as it used to be because of its genetics. And the other one is that trees growing close together behave differently. Trees growing further apart, so they'll grow faster or straighter largely, and height. They grow in height rather than diameter, which tends to be a good property for wood density. Now we've got a word in there, mensuration. It's actually a fancy forester word for measuring. So we measure these trees a reasonable amount because measuring is what drives the ability to model. Model is to know what are you growing, how fast is it growing, what's it going to look like later, and what then will that do for forest value and opportunities to add later. We do maintenance and mapping. Maintenance, you just keep the roads open and access available so that if there's any reason that people have to be in the forest, they can be. And there's a lot of reasons. You're inspecting for pest and weed control, and generally just as a sort of risk reduction, there might be a need if there was a fire. Mapping, we just do it ourselves using our own imagery, which we collect on unmanned aerial vehicles, which are drones. And importantly, this idea of the annual independent forest audit, which I always go on myself. I really take that part of the job seriously. We take our forest order to every forest and to see at anything that he would like to have seen, and he will have a look through the accounts and say, right, where did you spend the money pruning? Let's look at it. So that's go. So let's wood. Okay, harvest planning. Harvest planning is really it's in there because it's complicated, and this is where you spend a lot of money building roads and getting set up where you can harvest. So because it's complicated and expensive, it's really important that it's done well, because it's a place where a lot of value is won or lost, and it's one of our core sort of skills and competencies, although we do outsource a chunk of it in terms of some of the tech competencies around the grade marks and things like that, people marking up the field. But we do the imagery and set out the equipment. So the inventory tells us what logs and trees live in the forest, and therefore, you know, what you're going to sell and sales price. And then the mix of hauler versus ground-based, it's just telling you, can I drive to it with a machine, or do I have to extend a cable? Roads and landings. Landings are these red items. You've got 80 at the top, 79 in the middle. That's where the trees are hauled and where they're cut up, turned to logs. Now you've got access, you've got to get there. Environmental considerations, you've got to cross the streams, you've got to go across steep side slopes. Environmental considerations take into account those things. And so you get a resource consent, which allows you to do the things you want to do in the environment. You know, you've got to have there's regulatory things that you have to do. You have to get a resource consent is really an acknowledgement from council that what you're gives you a mission to do what you plan to do around water and soil. And it's very important to take this stuff seriously. So the harvest plan for the second rotation's in place because we did it well the first time, and in the Wairarapa Group, roads and landings are there. You can move one. That we won't stay on this picture. It's that's LiDAR, which is just an aerial image of what a forest can look like, and we're using this stuff to count trees now, which is quite a step forward. So we'll move another slide forward, please. So harvesting, you know, that's really almost the end of the job. So the objective, turn the trees into cash. Now, importantly, this is an opportunity where there's heavy machinery, a lot of bulldozers and haulers and skidders and, you know, diggers. So do no harm. Don't tip the soil into the streams, and don't compact everything by rolling over it with heavy gear. Don't break the logs. Don't hurt people. So we manage the logging and cartage contractors. We select them for safety and efficiency, and we manage them for productivity and competency. And we cut up the logs based on what customers want and what they'll pay, and of course what it costs to deliver it, because sometimes expensive logs are expensive to deliver. So we've got to know what's the best value. And for safety and efficiency reasons, we're doing as much mechanisation as we can, just really because it's just difficult, heavy work. Generally speaking, a tree weighs 2 to 5 tonnes. So the supply chain relies on this infrastructure that was coming from our previous harvest plan: roads and landings, transport, storage space. So we do an awful lot of work on optimising all those things so that the logs can be cut from the stump and delivered to the ship. The whole process needs to be seamless and fast, because the trees lose value as they become less and less fresh. So, you know, the most valuable log is the freshest. And that's a lot of what we do, is just planning for that fast delivery to the best customer. Now, we've got this concept of harvest period and time in the market. With our larger forests, it's really important that the forests they are large enough to give you a period of log sales which cuts across the top several cycles of price, so that you're protected from the risk of doing 3 months of logging when the price is the worst it's ever been. Because if you're logging for 3 years, you'll have 3 months of poor price and 3 months of remarkable high price, and a lot of periods where it's somewhere average. So, we do believe in this risk reduction of just being there for a reasonably long time. And we do a lot of harvest reporting, and I do the harvest reporting largely myself with a lot of help from the accounting team, which we tell you what's going on. And we distribute money along with the reports, try to distribute quarterly, because the money is no longer ours. It is the property of the scheme and the property of the investors. So the reporting's very specific and it tell you what's going on. So let's roll forward one. Log exporting and marketing. I suppose if we had a marketing manager for logging harvesting, which we don't, it would be me. But it's what I do. So it's a key role of ours. We have to understand our customers who want to buy logs, understand the price, their ability to pay, and get the logs as close to the customer as we can, because in a large sense, logs are what you might call a commodity, which is to say that if I have 2 pruned logs side by side, in a general sense, the customer doesn't mind which one he gets because they're the same. So to get more money from commodities, you've got to make sure the right customer gets them, and the costs and prices, so there's no extra margins in that mechanism between you and the money. So we get as close to the money as we can. And I'll go to China, meet the Chinese customer. I go to sawmills. It's good. It's good business. So we have this agency relationship with 2 of the largest log exporting and marketing companies, one exclusively from Gisborne and the other one exclusively from Wellington. That has happened largely because they are exclusive to each port, and also these are the 2 best guys, in my opinion, in that business, and they are very open and transparent. They are entirely comfortable with being audited for every step of the way. The reporting is very open. We have access to all contracts, all payments, all costs. It's a very good system, and it's one we spend a lot of time developing. It's a system of trust, but also verification. So let's roll on one. So what we've got is the Port of Wellington. In the foreground is the lease area, which we lease, and you see a whole lot of logs there. You see a couple of vessels, none of them loading logs, but they're there, a couple of sheds, and on your right, cake tin. So, that area there can hold 60, 70,000 cubic metres of logs. Ship hold 30. We usually put 20,000 on a ship ourselves. And we need to be able to hold 20,000 tonnes of logs there so that we can load our ship. So roll forward one, please. Wairarapa Group Forest Investment. Now, what you're seeing there is the forest that was known as Rangiora and is now passed into the Wairarapa Group. We're looking south from there. We're looking at what we'd call a taipo, which is basically a Maori word for I think it's actually pile. They're sort of lumpy-looking rocky piles. Interesting terrain. Grows very good trees. Second rotation, we did. We're very pleased with the results. First rotation, we've built. You can see roads and places going through that. So let's roll forward. Okay, I'll introduce Sean Roberts, and he'll speak to us a little bit about Wairarapa Group Forest specifically.
Good afternoon. So what we're currently promoting is our Wairarapa Group Forest, which comprises 970 hectares of forested land. It's split into 3 blocks. The first block is, you look at the top right, Aroa, that's in the Bideford district, down to the bottom right, Korori, which is in the Ngahepi district, and the third block, Rangiora, which you just looked at in the previous slide, in the Te Whorau district. So you've got some geographic diversity between the forests. So we've managed those blocks through the first rotation and now taking it to the second. So they've been harvested over a period of time. So as Bert mentioned earlier, there is an age class mix of 6 to 7 years already. So that means a shorter duration to harvest. Investment's done by way of a limited partnership. And in that structure, you have the benefits of claiming the tax losses, but you also have limited liability. So we'll manage that investment through. We just move through to the next slide. So moving on to the key investment information that we have. So projected investor contributions we show there is 20,647. So that's based on some inflation adjusted figures. 9,200 is up front for 200 shares. And then there are projected calls, which inflation adjusted is 11,447. So a total contribution of 20,647, although that figure might change depending on what we actually need for the cash flows over the years. There's an annual investor administration fee. We need to be paid for our work. And that's included in that 2647. The gross return, 115,531. So that's a gross IRR of 8.53%, and that's based on inflation-adjusted log prices. And we use the 36-month log price series to 30 June 2018 to come up with that. Just flick over to the next slide, please. So this is basically a quick overview on those IRRs. We can look at a different IRR rate if we use different log prices. So we've got 3 different series there. The one I just mentioned, we can use spot prices as at June 18, 7.61%, or just past 36 months, which isn't inflation adjusted, 6.44. And the bottom chart showing what would happen from our base case of 6.44% IRR, and what happens if the log prices decrease. So these are all contained in the product disclosure statement that we've registered on the disclosed register. And the next slide, I believe, is our risks. Now, this goes back to what Bert was talking about before, and like anything, nothing is without risk. So Bert's already talked about the fire, pests, disease, log prices may change, and also that you've got some people here, professionals that Bert has employed to manage your investment. So I think that brings to an end our presentation. I'd like to turn over to you.
Great. Thanks very much, Bert and Sean. That was excellent overview of Forest Enterprises and the investment. Got a couple of questions here. The first one is a question regarding carbon credits, and it's very simple. Is there any income from carbon credits in these forecasts?
No, we in this forest, it's pre-1990 land. So in that case, there is no carbon credit income. And importantly, there is quite a large price difference between land when you buy land. Pre-1990 land is considerably cheaper than land considered post-89, which is in the ETS scheme, and that would get the credits. So we paid about $2,600 a hectare or thereabouts for that land, and now to buy land with carbon credits would be a lot more. And in my sense, that's a more risky proposition.
Okay, great. Thanks, Bert. One other question here. Can the timing of the harvest be adjusted to match market conditions at the time? So, for example, if the market's particularly hot, what flexibility is there to bring the harvest forward, or the opposite, to delay until market conditions are better?
That's one of the questions we get a lot, and we probably are harvesting earlier than some of the prospectus forests had initially called for, because currently price is very high, but also because we're trying to spread over perhaps a longer period than we'd initially anticipated, because of the challenges around being able to handle the sheer volume of harvest that you can get. Now, the idea that you could harvest later is quite challenging. Once you've started harvesting, you are committed, because you've engaged quite a large group of high-cost guys on contract who will only sign contracts if their work is assured. And so, you you're really aiming for increased efficiency rather than trying to time price. And so if we're in the market for long enough, then price will fix itself. But if you're not efficient, it's very difficult.
Thanks, Bert. And just a reminder, we've got a few minutes left, so if there are any other questions, feel free to use the Q&A icon and ask more. There's another one here about insurance. So, Bert, can you talk about the insurance on the forest, please?
Okay, I can talk about insurance, and I will just quickly take the opportunity. I see a question. Are any of the directors or shareholders have any skin in the game? I personally have shares. I believe Nikki's got shares, and other staff in Gisborne have got shares, and other staff in the office have got shares in this particular investment, as well as shares in other ones. So yeah, we believe in it. I got one for my daughter, and I'm probably later going to get one for my son. Now, insurance in forestry is quite a challenging field. So we're engaged with Aon as our agent, and they use the Caitlin's Syndicate for underwriting. We've got $450 million worth of crop insurance coverage. It's a very, very technical field, and there are some quite particular aspects to it. First loss provisions that you can lose $20 million a year and claim for that, but after that, you can run out of insurance. Now, the insurance value that we get, because we've got 20,000 hectares, of course, we're getting it at a very good scale, but there's a limited benefit to taking a higher coverage. So you've always got to weigh up how much coverage you pay for, because it comes off the returns at the end. And a lot of, we do quite a lot of small claims, very few large ones. So Mulder Coleman and myself do work through the claims as they come, and they're generally for limited areas that might have blown down or affected by snow, and it's very irregular. Now we've got one I could see on my screen. How many rotations on the same soil do we pull the stumps out? Now that's actually a good question, because one of the things that I'm very proud about forestry is it's sustainable. Now, you probably notice, native beech forests have been around just about as long as the land's been dry. The forests in New Zealand just grow and grow. So sometimes people think that maybe taking away the tree trunks out of the forest, as you do for the harvesting, can impact on that. But it doesn't need to, because timber is carbon, and carbon is made from the atmosphere by photosynthesis, sunlight, water. So what is important is the trace elements, which generally speaking, the nutrients are contained in either the bark or the needles, and most of the bark and needles remains on site. So far, we have not needed to fertilise at all. Occasionally, pine forests get a small amount of fertiliser if they're short of trace elements. And we plant between the stumps, because the stumps, they remain there. Stumps are where existing, what we'd call mycorrhiza, which is tiny fungal ribbons that exist in the soil and condition the soil for trees. Then the new seedlings get the benefit of the fungi that's already there, and they'll grow faster because of that.
Right. Bert, there's another question there. Did you see that?
Yep. So I've got this question here from, I'd like to know more about the costs I'll pay for a small parcel, i.e. $9,900 parcel on top of the initial investment. Do I pay during the period of time of investment the extra costs? This is an admin fee and other costs. So yes, there are costs that are ongoing. So in the product disclosure statement, we have a cash flow, and that's modelled on 200 shares. When the calls are made each year, a statement is sent out for payment showing what is payable on the amount of shares that each investor owns.
Thanks, Sean.
I'd just like to add to that, Sean. Good answer. The 9,200 up front is largely the land. So you buy the land, and then you contribute as you go through those first few years, largely to tending, to rates, to insurance, to management. So that's why there are different levels of tax return on that as well.
Excellent. Probably got a couple more minutes if anyone wants to fire another question through.
There's another point as well that we'd like to make, is that there are tax losses available that can be claimed. So that reduces the inputs that you have. Again, they are modelled in the cash flow and the product disclosure statement. So for a base parcel of 200 shares, we've modelled that at $4,126, assuming you're on a 33% tax rate. So that will bring in your net payments for that parcel of shares at $16,520.
Great. Thanks, Sean. If there's no further questions, Bert or Sean, any final comments that you'd like to make?
Well, I just would like to thank Syndex for the opportunity to talk. Oh, I see another one, sorry. And it's, are we expecting a third cycle? And are the forests close enough? It's two questions for economy of scale. So the third cycle, look, I think that land that's forest is very likely to stay forest more or less indefinitely forever. Now, it's possible that future generations might revert to living in caves and whatnot, but if they did, those forests would endure anyway, because of the nature of forests is that they tend to reproduce themselves. So, but there's certainly, I personally own a third rotation forest because I'm off a farm and we've kept it. Now, the forests, we're saying, are they close enough to get harvesting economies of scale? So what I would say is that some of the forests that we've amalgamated together, which we've done on a few occasions, have been done because they are adjacent. They touch each other and they have a real economy of scale in that they reduce travelling and shifting of equipment. These three forests have a different economy in that they we might travel between the forests to do the harvesting, but making the forest larger reduces the unit cost of things like auditing, and it keeps you operating within the market even though you travel. But it has a different risk reduction profile in that is very being physically separated. You're not going to have the same physical event in all three forests, whether that might be a fire or a wind.
Great, thanks, Bert. And there's just one clarification question below that too, with respect to the carbon credits.
Okay, the carbon credits, and of course, we're all waiting on the government to finalise what the new scheme is going to look like. And the new scheme is going to be quite different to the scheme that we're used to now. But with the existing forests, any forest that was planted after 1990, post 89, is accumulating carbon credits as it accumulates carbon. Now, all forests accumulate carbon. It's just that the legislation worked around a time which allowed you to claim the units on that. So the Wairarapa Group Forest planted, well, they were initially forests before the cut-off date of 1990, which means that their land use was essentially grandfathered into being forests, and there was some small amount of compensation paid, and they're not accumulating any further carbon. But it means you've also don't have to pay back carbon at the end of the harvesting cycle, because what you've got to remember with this carbon is that you get it as the forest grows, so you have an income, and then you have a liability when the forest is harvested. So you've always got the offsetting liability for the carbon in any of these ETS forest schemes, and a lot of people probably underrate the importance of that quite difficult and enduring liability that's there. So no, we have no revenue and no liability for carbon, so long as we replant.
Great. Thanks, Bert. Well, it looks like we come to the end of the questions and probably the end of our time. So, so thanks, Bert and Sean, again for that that sort of great presentation and overview. And thanks everyone for your participation. Hopefully, you would have seen from that there's a great deal of expertise and experience and passion for the forestry sector in Forest Enterprises. There is a contact page up on the screen now, so if you had further questions for either Bert or Sean, you can get in touch with them on those email addresses and that phone number. Thanks very much for participating. Once again, apologies for the sound issues that we had at the start, but hopefully you got what you wanted out of that webinar. Thanks again.